Hello, hello, hello. How ya? Did it choose the right microphone this time? Yeah. Hey, Ryan. Yeah. Hey, man. We need to chit chat. So, yeah, maybe we could do that after the webinar. A lot to do. One of the things I have to do today is choose any war over the last 200 years and discuss it mathematically. I mean, I have to prove it with math, algebra specifically. I thought maybe I could discuss the Boerish Wars. So, anyways, what day of the week is it? Is it a Thursday? Let me double check that. I always forget what day it is. Yeah, Thursday, April 13th, 2017. This is your daily Forex trading strategy session brought to you by forex.today. No, the markets are closed on Friday. No webinar this Friday. No webinar tomorrow. It's Good Friday. What are you going to do? Wake up, lose a lot of money? Hey there, boo-boo. Welcome to forex.today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. We offer ECN models for you if you want. If you'd rather have a fixed spread, we have that. If you'd like a variable spread, we have that for you too. What you do is you go to TradersWay.com. You click on open account. You can open a demo, like honestly, in a minute. And walk around the back office, download MT4, check out our execution speed, which has been tested by independent third parties to be much faster than most, much faster than the big boys. Spreads and all that kind of stuff. You'll love it. Swing on by, tradersway.com. We'll take care of you. This is an example of it. I'm here today on their behalf at forex.today for free because we want you to succeed. And this is our investment into you up front to earn your loyalty and respect. I do these sessions every day, Monday through Friday at forex.today at 7:30 in the morning. Fridays, first Friday of the month, I'm at FX Street where I do trade non-farm payrolls live. And former Forex Speaker of the Year, former Best Forex Blog, former Best Forex Educational Webinar, Best Forex Special Event, Best Forex something else. It's been a good 12 years. Anyways, let's get on with it. Cool. Zippity doodle, zippity yay. So we got gold going up, and it's up too much, isn't it? How interesting. It's funny when the president of the United States says something can move the market. You are the one. Hey, what an amazing coincidence. There's a monthly pivot right there. Crazy. Oh, is that the monthly target for gold? That's weird. That's weird. See, that's the projected high for the month for gold, the conservative target. The conservative projection for bulls is right here. Now, the aggressive one is farther up. But nonetheless, here we are now. Clean that up a little bit so it's easier to see. Cool, right? Where's the first day of the month? Let's move this to like an hourly. April 1st, right here. Cool. Cool. La, la, la. Yeah, opened high and everything. Opened high and went higher. One of those things. But M2 to M4, M2 to M4, that's 2 weeks in a row that the standard swing theory that I taught last month, that the swing trading course, has worked. Now check it out. The week before, at the swing trading course, there's 2 counter trend trades, this being one, and that one also worked, and this is the actual target for the counter trend. So 1, 2, 3 weeks in a row. What an amazing coincidence. Well, what are you going to do? Sometimes you just get lucky over and over and over and over and over again. Thank you, gold. You're beautiful. You're beautiful. Oh, is that gold? Yeah. Beautiful. Seems like something in this webinar software bombs my computers, huh? Because I notice I've fixed these charts like 3 times already. Mm-hmm. Lovely. Okay, cool. So anyways, oil hasn't really made it much higher, which is fine because I want to sell it up here. So I'd like for us to, scale out some of the bulls. So down to the 21 and buy is completely valid. That's last week's counter. All right. Anyways, yeah. So bounce off the 21, up into here, 1, 2, 3, back down. That's what I'm hoping for. Make sense? And of course, where it opened here, you briefly had an opportunity to sell if you were a bear, and that very quickly diminished, dissipated, disappeared. So now you're just like sitting and waiting, waiting and sitting, hurrying up and not trading. Cool. Bulls, the only way bulls really could have been on this is where? Down here. Because there's, during the weekly here, it's not a perfect entry, but there definitely is, especially if you look at the 5A cross. Long M2, and this is the target. and it just opened up overbought, went up, opened up overbought, went up. Oh well, should have been on gold anyways, huh? But what are you going to do if it's overbought? Buy it? No. Why do you care that much? Okay, and to start the week, we had this as a top, which was an entry short. The target on Monday was here. Then we were here Tuesday, and I said, once again, the target is down here. Look it, check it out. So what is it now, Thursday? Check it out. Making a mic check, one. Ugh. This year, Easter fell upon a weekend. You ghetto boys are Easter again. Yeah. So anyways, down, 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 up, up, sell, down, 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 up, sell, down, 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 take profit, get the hell out, I think is how it goes. Yes, you could obviously use the moving averages. I'm just saying it's still overbought, right? And there's no swing. But yes, you would ride the 21 for sure. For sure, eh? Okay. Amazing though. So we've hit our target. I think you should be done. You can't prep for another short. Okay. You can prep for another short and your target would be here. But if you get this down to 8.5, you need to be at done. I think it's even 851, right? 85132. Yeah, so maybe, okay, if you're really that desperate, okay, maybe you have this here. But why do I say desperate? The reason I say desperate, I see some of you typing. That's all right, come on. Yeah, okay, so now it's Thursday and now you're getting bearish. I'm like, that's the funny part, right? Oh, now that it's fallen all the way to support, now I will sell. You know what I mean? You should be getting out, right, as Peter's saying. Okay, maybe you were not a bear here, but at some point you should have recognized it kicked off the M3. So a swing trader is going to sell retracements. Look, retracement back to the weekly central. Sell, right? Retracement to the next pivot. Sell. But anyways, so now we're down here. You know, you probably should have gotten out already. I mean, hanging on more. There's a sense of either desperateness or maybe over aggressiveness or at some point, but I don't know, right? I don't know. Yeah, I mean, come on. So realistically, you should be even short about here, even if you missed the top, which is fine because you may not have been a bear, right? But short Monday, short Tuesday, short Wednesday, take your profit, go to the beach. This year, it's Good Thursday and Good Friday. Right? You guys get it? I know you get it. I know you got it. I know it's good. My trades are tight. My stops are tight. All right. Now here's one that started too bearish, did retrace, could have maybe sold in here. A lot less ideal, right? And then maybe this was going to bounce up because this chop and this chop and this chop, maybe it'll bounce up. So bulls would have lost, not a lot though. And bears had to take a little extra risk, really. Now, if you're, again, using pure moving average and not using any swing strategies, right? Down, 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 up, up, sell, right between the 21.55. And you can see that these moving averages are heavy, aren't they? Don't you see them as a weight? This is holding these candles down. But look where it stopped last week. We stopped there on Tuesday. By Friday, we're basically in the same place. Tuesday, Wednesday, Thursday, Friday, basically the price didn't change. So here we are again, drop by Tuesday, Wednesday. You hit the green zone, and once again, bounce. Now here's the interesting thing, right? These are just colors on my screen. Isn't that funny? They're just colors on the screen. Look at this. Look how well it held. For some reason, 81.9570 is very, very, very important. So that should give you confidence that we know what's important in the market ahead of time. Right? And the green zone was important back in there. You see this ginormous move here, and you see where the market closed. That's a counter trend opportunity starting on Monday. And the target is the new central pivot. It dropped a little first, and then it went up and went a little bit above, but generally did what we say, right? Green is the bottom, green is the bottom, counter trend, red is the top. Lovely. And then inside week, huh? So really, 1, 2, 3, 4, 5, 6 weeks, 6 out of 7 weeks. Look at that, M2 to M4, 7 out of 8 weeks. This one, M3 to only the support. Okay. Open up too hot, down to the 21, which is an aggressive buy, up to the target, total collapse. But stopping at the weekly central, right? Up, right shoulder, M3, down. Right? Up into resistance again, down. Up into resistance again. Because if you look at it, right, the only thing going on is this. Okay. Lovely. Boo, 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 boo. Unless you want to do it this way. Do, 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 boo, boo, boo. Boo, 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 boo. No, 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 no. Yes, you're ugly. Your wild smile so worn, and your teeth so green. Baby, you smell like a chimpanzee. But I like the way you look tonight. All right. Yeah. Okay. Yeah. Fine. Okay. Yeah. Guess we'll go CAD now. Where my swing is at? So a swinger will know this is your sell zone. This is your target. It's a beautiful day. So here we are, Wednesday, Thursday. We should be done. We should be wrapping it up on this sucker. Again, it's going to be a good Thursday and a good Friday this year. And that's awesome. What do you think, guys? Now check it out. This is the sell zone on Sunday, Monday. Down into the support pivot. Up into a pivot. Down into the target. Back to the pivot. Down on its way to the aggressive target. And you should stop trading this just above $1.32. I mean, I think it's a little bit obvious that these pivots are important and influential to the pricing of the USD CAD. Hey, do you think the Nigerian Minister of Petroleum Resources is a wealthy man? He's going to be on CNBC or something coming up here. I'm like, damn, that guy's got like a $5,000 suit on. Just wondering if he was rich before he was the petroleum minister. Well, he is a servant of the people. So yeah, just looking at this, do you remember how it double topped last week? Dropped significantly, signaling a lower high, which then hit the M3 and then down and up and down. Right? This whole thing started up here. There was a time when I think I had it like set like this. So we had a double top followed by a lower high, right? And of course, what predicted the lower high would be the break below the neckline here on Friday. It slingshot it up, lower high on Sunday, Monday, down. Do, 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 do. And here we are, the heartbreaker, a widow maker. Now all the way back to $1.09, which is kind of a problem. It's a little too low. I understand it not going up, but you know, this is it yen strength or is it yen strength or is it dollar weakness? There's moderate yen strength. I wouldn't call it a lot. You know, I wouldn't call it massively strong. So, yeah, bit of disappointment what Trump said about the currency being overvalued or doesn't want an overvalued dollar. But all that's come down pretty hard as the world just moves on to back to what they're doing. Guess this is a decent enough time to talk about news. How about Australia? You trade the Aussie? Guess we can go back to this. So Aussie, okay, they had a good jobs report, 16-month high. They're expecting 20,000 jobs. They got 60,000. Yeah, they were off by a few 100%. Oh, well, close enough for government work. Unemployment rate, 5.9. But anyways, that's much better than expected. But isn't it lovely that it bounced and bounced and bounced, bounce before the Aussie jobs report, and then pa-chow, okay, off it goes. And did you see that one? Huh? So, right? It's too bad someone hasn't taught you how to scalp the retracement on this thing. Because if they did, this would be a drop into a 618, which is perfect part of the sweet spot. Okay. And oh wait, this is what I teach you every time we trade non-farm payrolls. Now, l'oufletulumum. Now, typically, if you're using Fibonacci, the 618 would only predict the 1382. Okay, but of course, this is not typical. It's news, unexpected news, which is the real news. But it also, all it did was go back into the role reversal. So all it did was go from support to resistance. Just the velocity in which it did such was greater than in normal market conditions. But it's lovely how no matter what you do to these charts, it's logical, no matter how emotional the market seems. Like, oh my gosh, look at that. 3 times as many jobs as everybody expected. Holy smokes, pa-chow. It went from support to resistance. Like, yeah, well, what else would it do? Right? No, I thought it was the end of the world. I thought it was whatever. No, it went from support to resistance and stopped. Nice. Very nice. Our potassium is the best potassium. All of the potassium's inferior potassium. Yeah, that's some good potassium right there. Boom. Okay. Lovely. All right. How do you want to play this, bro? How you want to play? How you explain this, Lucy? How you explain this? Boop 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 boop. So, I believe we did talk about a pivot cluster here yesterday, didn't we? Correct me if I'm wrong. I said up until it hits the cluster and then time to sell. Is that right? I think I remember talking about the cluster. And someone else had sell it at R1. And I'm like, well, that's not really what an R1 is all about. But it is, right? It was like, let it go up into here and then maybe sell it. Yeah, a couple of people say, okay, cool. Because I'm not sure what I said, but I can look at it and I can tell you what I would think. That's the nice thing about the truth, right? See, liars have to try to remember what they said. I don't have to remember what I said. I just have to ask you, did I say that? Because I'm looking at it and I'm like, yeah, well, in this scenario, I'd wait for it to come up here and then I would look for some sort of reversal pattern and take it back down. Joe says up, down, up. Oh, yeah, yeah, just like this. Oh, good. Good, good, good. Joe said it before I even drew it, so that's cool. Yeah, if I were me, that's what I would look for. And that makes me think of a comment here of, it's not me, it's not my opinion. I mean, I am opinionated, and that would be mostly on the fundamental side of the business, right? But technically, I don't have any opinions. It just is. It's like if I gave you sheet music, I guess you could have some interpretation on how to play the notes, but generally speaking, if it's piano, it tells you what notes, at what time to hit the notes, how hard or how soft to hit the notes, when to hold the pedal down to sustain or not sustain. You know, I mean, it's pretty set there, right? Furry lease is furry lease, not because everyone likes to play it the same way. If you play the notes on the paper, it's pretty much established what each note should be like. So I kind of look at the charts like sheet music. I don't have an opinion. My opinion is whether I want to be a bull or a bear, whether I'm a buyer of this market or a seller of this market. That's my opinion based on research. Okay. But charts? There's nothing opinionated about charts. There's support and resistance. There's buy zones and sell zones. There is nothing else. So I have to line up my opinion, which is subjective, right, to market conditions, which are not subjective. It just is. Right? So Peter Ward agrees, right? It's just like reading music. So is this a buy zone? I wouldn't buy it there. Would you buy it at the weekly M2 on Monday? Hell yeah. Right? I mean, my God, this is such a buy zone. It's sick. It's gross. It's obscenely a buy zone. I mean, when a guy writes a book about a buy zone right here 8 or 9 years ago, okay. I mean, so yeah, it's just a factual. You can't sell it here. You just cannot. You can buy it, and if you bought it, this would be your target. We only looked at what 3 or 4 or 5 different, you know, charts. Gold, I think, worked as well as some currency. So here's another one. There's the buy. There's the target based on the buy. Just a very basic swing trade. And now what? Well, would you buy it now? No. Is this support? Well, you could buy at 21 if you were blind, right? Because yes, it could be a dynamic level of support. This is resistance based on price action. It's resistance based on weekly pivots. It's resistance based on monthly pivots. I mean, what kind of buffoon would buy it? Right? Like, really? You'd have to be really, really bad. Now, it could still go up. Oh, yeah, that's fine. But is it a good buying opportunity? No, it's not a good buying opportunity. So you either leave it or you say, well, if these, maybe it's not aggressively down, maybe we're consolidating. So whatever. It's just now on the small time frame, you say, well, based on my analysis of the charts, my technical analysis, somewhere around here. And of course, I said this, I think, on Monday and on Tuesday, right? That somewhere up here it should double top and drop, right? Did I get that specific? Back on Monday or Tuesday? It's now, Thursday, but it seems to me in this cluster, you would look for a double top, right? Followed by a 1, 2, 3, right? Now, wait. So this may even go back to a different conversation as well. Didn't we have a big, long conversation about looking for double tops and double bottoms? Just doing that one thing at least 100 times, doing nothing else, just passing on everything except double tops and double bottoms? Peter says, yeah. Anybody else? Yeah. Yeah, about YJ. Yeah. So after the double top, what do you do? Because your job is to look for the double top, right? So what is the exact mechanics we went over that would allow you to develop patience and discipline and consistency so you can build confidence based on your actual trading results? Yeah, fib it and look for a sweet spot, right? I mean, was this yesterday or the day before? I think the day before, right? But I spent a good 20 minutes on it, I believe. And so the idea was to sell in that gray area, right? I mean, that's 100 cement, isn't it? Look at that. That's all you had to do. See, it's one of these things where it's going up, you can't buy it, but you can get ready to sell it. And then you say to yourself, well, I would sell it here in this pivot cluster between the weekly and the monthly. And if it double tops, I will look for a lower low. And if it looks for a lower low, I'll fib it and sell it somewhere between the 382 and 618 Fibonacci retracement, and I should make money. I mean, that was the whole entire conversation, right? And you would have made money. Now, the funny thing is, this is something going up. It's something going up. And we say, well, look, we can't buy here. So we'll prepare to sell it. But the market has to do what we say it's going to do. Here's the price in which it will make the pound dollar fall. Here's the technical pattern I demand of the market before I sell. I mean, that's awesome, isn't it? Who's in control now? Cool. So anyways, lucky again. Thank God we talked about that the day before it happened. Yeah. See, I told you it's going to be a good Thursday. Hey, did you hear that the Ukraine cut interest rates? Yeah, I'm going to have to pull my huge investments out. They cut it all the way back to 13%. 100 basis points. Well, if that's what they're going to do, I bet. Joe, usually it's the next level of support or resistance or a fib target. A 382 predicts a 618. To me, that doesn't even matter because risk management and such is a different skill altogether. Just like someone else said, well, do you only trade it in the direction of your bias? Well, for most people here, your bias sucks. So why would, right? Why would we rely on that? So you're like, in that case, what the thing to practice was the technical analysis, but more importantly, the patience and discipline to wait. And once you get that down, then we can work on something else like proper risk management. When do you move your stop? What is the target? You know, then when that's done, maybe in year 2 or year 3, you can get better and better at your fundamentals, right? Because I tell most people, like, look, just flip a coin and you'll have your bias set. Because that's what's most important, right? So Joe, like, what if you flipped a coin and it said, oh, you're a bear on the US dollar? Fine. So for the rest of the year, you're a bear. So the market will either give you bearish setups or it won't. If it gives you bearish setups, you'll make a lot of money. If it gives you bullish setups, you'll either get virtually no entries, or if you do enter, you'll lose a little bit of money. And that's the difference between professional traders, whether they have a good year or a bad year, is whether the market conditions agree with their bias. The trading is easy. You buy it, support, sell it, resistance. Why is that so complicated? Right? So whether you have a huge year or a mediocre year has to do with whether the market agreed with your bias. Where amateurs get caught up is they're just all over the place. They're just an absolute mess on everything, right? Technically and fundamentally, and it just clearly shows that they have no idea what they're doing. So the first thing you should do is stop being a mess, clean, right? And do very specific things in very specific ways, and the market will either giveth or not. But you'll develop the patience and discipline. You'll get the experience under your belt, seeing market conditions change throughout the day, the week, the month, the quarter, the year, through the fundamentals, through the political cycles, all these different things. You'll gain over time. But the most important thing is to say, well, because I'm a bear on the US dollar, I want to buy the euro dollar here or here or here. I want to buy the pound dollar here or here or here. I want to sell the USD yen here, here, or here. And now you're waiting for those potential opportunities to show up. If they do, then you drop into your smaller time frames and look for technical entries like double tops and lower lows, right? But if you don't get those, then you don't get to trade. And what happens is you don't have a bloodbath month or a bloodbath day. You don't even have a bad year if you get virtually no setups, right? Right. So So there's a comment here, but your bear setups will have less probabilities if your bias is wrong. Yeah, but what'll happen is you won't get many setups. If you're a bear and the market's bullish, it'll be a rare occasion that you get a setup. But even when you're horribly wrong, there are times, right? If you're a bear and the market's incredibly bullish, it does pull back. Bulls do take profit. It does turn bearish for a while. And eventually the trend will come to an end. And you want to put yourself in a situation where you're not a dog chasing its own tail, right? I'm a bull, I'm a bear, I'm a bull, I'm a bear, I'm a bull, I'm a bear. Because now your timing is going to be almost more important than the market conditions. You know what I mean? You will have setups that don't fulfill, like double tops and bottoms. No, but then you didn't get the trade set up. You see what I mean? Look, consistency in your bias is way more important. If you look at your trading like a year, see, most of you guys look at your trading like a session, like you sit down for 3 hours and you have to make money. Look, most people are just not that good. They're just not that good. You can't just sit down, make some money, go away, come back in the next day and you're like, should I be a bull or a bear? What currency pair is this? Pound kiwi. Okay, the pound kiwi. Now I'm going to do this because the MACD told me to do it. And I mean, it just no consistency. How could you possibly expect consistent results when you don't have a consistent behavior or a validatable opinion? Just, do you honestly believe that professional traders trade that way. They walk in the office and nobody knows what's going to happen today. Oh, Coral. All right, look. If you want to trade that way, then forget it. Throw everything out the window that I just said. You go ahead and get yourself an auto chartist and go to town. By the way, the people at auto chartists suck. And I'm usually a pretty nice guy. Let me tell you about a story about auto chartist. I get to New York City back in like, I don't know, 2005 or something. And I bump into a guy and he's like, "Hey, I'm with this company called Auto Chartist." I'm like, "Really? That's awesome. I like the idea." And he's like, "Yeah, it'll put patterns right on the charts and everything." I'm like, "Hey, that's really cool. I think if you did that in a educational way, I think you could teach people. I wouldn't use it like a signal, but you could really use it as an educational thing." And he's like, "That's a really good idea." And then he's like, "You know what? This is my first time in New York City." He was from, I don't know, some other place in the world. Might have actually been South Africa. Can't remember. But anyways, he's like, "Yeah, my first time in America. I'm in New York City." I'm like, "Oh man, tell you what, I got a limousine. I've invited some clients of mine and such that have also never really been to New York. So I'm going to take them around New York City. We're going to go to Wall Street. We're going to have lunch in Carnegie Deli. We're going to, drive through Central Park. Come with me, be my guest. You just come into the limo. You'll get to meet some other partners there. This will be good for Auto Trader, right?" Great. So I paid to take this guy all over New York. I buy him lunch at Carnegie Deli. Everything's great. And then I say, "Hey, I run a thing called FX Boot Camp. It's educational. Why don't we sit down and I have some ideas." He's like, "Great." So later that day or the next day, we're sitting down in the lobby of the big hotel, and I'm like, "Look, we should use it in an educational way. In fact, what we'll do is we'll send out an email newsletter type situation where every day you get a different lesson and this, that, and the other thing. And we'll use this service and we'll do it this way. And this is how it'll be organized." And he's like, "This is great." He wrote it all down and then did it with Rogge Horner. He even used the email service I suggested. Just totally screwed me. I'm like, "Oh, what? I took you to Rockefeller Center to see the ice rink you see on TV, you scumbag. I took you to see the bull on Wall Street in a white limousine." Yeah, totally happened, huh? Isn't that amazing? What kind of person does that? I mean, it's amazing, right? Like, people don't do that. I'm a, I don't know. I'm an optimist, right? I mean, there's a code of honor to business, but especially to entrepreneurialism, right? I thought this guy needed help. It was a small business. Gee whiz, eh? So anyways, you can take your auto chartist. But what I'm saying is, don't just my heart sunk when you said something about the auto charters. Like, "Oh, but when you get setups like on auto charters, there are many and many to oh, gee whiz. Just turn that crap off, first of all. Yes, it'll tell you 9,000 different opportunities to trade. Great. I don't want 9,000 opportunities to trade. Okay? Yeah, we for a brief moment, because I was helping him set up an educational thing. Yeah, we used it briefly because the idea is like what I wanted with them is that it would pop up and it would say, "Oh, here's this wedge and stuff," and I just wanted people to recognize it was a wedge and stuff. But I don't know. It's so stupid. Like I couldn't imagine making a decision with money because a thing popped up. Um, I mean, it's sickening to me to even think about it. Now I'm sweating in a terrible way. I feel nauseous, not nauseous this time, but it's what a disgusting thing to think. you manage, let's say, $100 million, and you're sitting there and you're like, oh, my $9 a month software told me I need to sell this. What do I sell? Oh, I sold it. I mean, it just takes everything from the idea that you want to be a smart, intelligent, educated, experienced decision maker that analyzes the technical and fundamental aspects of our market and make decisions for your clients. Or sell because Auto Trader showed you a wedge. You know, it's just like, it's gross to me. It's so far from what you should be doing that it's a disservice. Right? So, anyways. Yeah, so anyways, what I would rather you do is start in the beginning, get really good at just identifying support and resistance. And then once you're good, and there's two different types of support and resistance, by the way. There's, right? There's market, and then there's price. Once you're good at identifying both market and price support and resistance, then what we could do is look for very particular types of entries at support or resistance. So like what we're talking about before, up into a cluster of resistance pivots, by definition, they're resistance pivots. So in there, you would look for a reversal pattern. So name me one reversal pattern out of the 5,000 that Auto Chartist would get you. Well, how about a double top? How about a double top with 1, 2, 3? I mean, that's so unbelievably specific, right? And that's it. And that's enough. But let's say you did that exclusively for 1 year. And at the end of the year, you only had 150 trades. But more than 100 of them were profitable. You'd have done fine. So then in year 2, you're even better at identifying support and resistance, but let's use it a different type of entry. Instead of a double top, you do something else, right? And then slowly add to it. Well, again, look, so the comment here is, I thought if you worked hard to develop a bias through study and hard work, and then once you have your bias, you look for patterns based on what Auto Chartist would tell you would fit that bias. But no, that's not what you want. No, because you're going to get so many entries. You know, it's like you're shopping while you're hungry. You just got to be buying stuff for the weirdest reasons. Right? And just, again, I ask you to do strange things like pretend you're a billionaire. And you're developing a billionaire PPI negative, actually. Whoa, interesting. A billionaire, but you're developing a billionaire portfolio, right? Because I want you to prepare mentally and spiritually and emotionally for all these things. But I really doubt if you managed $1 billion that you would care what Auto Chartist told you. Well, I lost connection in a couple of different platforms here. We'll see if it comes back. But there's just no way you would leave it to Auto Chartist, right? You would just never leave such an important decision. Like, look, it's a bat pattern. So what? Oh, it's a rising wedge. I mean, I don't know. Maybe I look at the market differently too, where I think a lot of people make trading very complicated. And I've never been a fan of complication. Back when I was a venture capitalist, I looked at hundreds and hundreds and hundreds and hundreds of patents, of which I read very, very deeply into how things were made, because very often I would fly the entrepreneur in and they would bring their prototypes, and, I can't have him show up and I don't even know what the hell he's got. Why would I fly a guy out to my office and he pitches me his thing and shows me the prototype and I don't get it? I mean, no, I have to get it. By then, I've already done a lot of study. I brought in my analysts to research the market and all that kind of stuff. So I really got to know these technologies that were developed. Let me just tell you, if it's complicated, it will be very expensive to make, very likely to break, and almost certainly going to be used improperly by the end user because it's complicated. They don't get it. And people are stupid. There's not very many smart people left in this world where you just give them something and they'll just not use it right. Hey, look at, I got this really cool thing. Good. And they won't use it right. It's sort of like, hey, here's the internet. We'll connect 2 billion, not 2 billion, 2 trillion computers and other devices around the world, all interconnected so they can talk together. And then we can share pictures about cats. Like, really? I mean, people are stupid. Stupid. So you give them something complicated, it's no matter how awesome it is, they're going to break. Like, do you guys know Salesforce, the, the the company? I went to their launch party, by the way. It was called the End of Software Party. It was in San Francisco. They had the B-52s. I was right up at front of the stage. Free booze, free food. It was pretty cool. All right, so here's usually what happens. A company hires them, a company of 20,000 employees, right? And this is very complicated software that can do amazing things. And a company will come in, hire them, they'll spend $50 million having Salesforce built and integrated into their corporate infrastructure. And then they all use it as a contact database. They're like, dude, you could buy $50 piece of software to just enter your contacts in. That's all they do. Blah, 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 blah. Right? And then they start passing spreadsheets around. I'm like, dude, don't you understand that you have a relational database that can do like all kinds of really amazing things and help you look forward, to help you do all this and analyze all that and do all this stuff? And they're like, no, we enter our contact, and we have like a contact database in the Salesforce, and then we have another one in our other database, and then we actually do everything off of our Excel spreadsheets. And like, dude, stupid. America, they'll spend $50 million and then not even use it properly. So complication sucks, because even if it works, no one's going to use it right. What we want is simplicity. Okay? What we want is simplicity. The most important thing is support and resistance. So we don't need, honestly, anything else than that. If you want to really complicate things, you can add like a moving average crossover entry. So if you're at support, you can wait for like a 5A cross up and buy it off support based on your 5A cross. Done. That's how complicated you need. If you're not at support and resistance, it's not an entry. If you get an oscillator crossover, but you're not at support or resistance, it's not an entry. If you get a moving average crossover, but you're not at support or resistance, it's not an entry. If you get a wedge, a rising wedge, but you're not at support and resistance, it's not an entry. If it's a falling wedge, but you're not at support and resistance, it's not an entry. You getting the idea? So the patterns are almost meaningless. Why would I want 5,000 different patterns when all I want to know is, hey, dude, are we at support? No. Dude, are we at resistance? No. What's the third question? There is no third question. Okay? Oh, it totally looks cool. Yeah. Yeah. It's very cool. It's cool looking. It's training wheels for I don't know. I don't know. I think, like I said back in 2005 or something, when I met those idiots, um, I said, look, I think it could be a great educational tool, but I'd never trade with it. Oh my God. I mean, it's so counter what you should be doing, right? I want you to be independent. I couldn't imagine a thing pop up like, oh, it's a wedge. I guess I should sell. I mean, so it's, yeah, no, man, no. Right? I thought that you were in control. I thought you were the guy I was paying a management fee and a performance fee to. Right? Yeah, Joe. So, wow. So some of you guys are, I guess, starting out. I guess, yes. As I mentioned, pivot points, right, are support and resistance for the market, right? But you can also have support and resistance of price based on price action. Those are the two types. Oh yeah, you're going to lose money. The question is, how much do you lose at a time, and how often do you lose money? But losing money in trading, I mean, I don't know, how could you not lose money? You're going to have a 100% win rate. But look, if you buy at support and it falls through support, two things happened, right? The market is much more bearish than you thought, right? Or you were not at support. The thing is, if you buy near support, I don't mean like, right, right. Who said it earlier? Ryan, I think, said, 18 candles after. No, no. Look. Okay, let's say I wanted to buy at the weekly central pivot point because I thought that was support. Okay, where would I put my stop? I mean, look, it doesn't need to be right. It doesn't need to be far away. So if it did this, and then immediately, let's say the next candle is giant green. Okay, where's my stop? Here? What's your trade plan? It's going to bounce at the weekly central and go up. Good. What are you going to do if you're wrong? Lose money. Okay. Okay. And if it falls further, you're going to buy it down here. It's your call, right? Try again down there. Okay. Notice this was the 786 though. We might have covered this on Monday. 786 predicts a lower high. So why don't we 618 the 786? So that puts us our high next week. Okay. There's a sell zone right there. Lovely. Okay. Okay, so the idea is have small losses and big winners. I mean, what if somebody looked at your trade history and you seem to lose half the time? Is that a problem? Well, Peter, then you have to work on your entry, because I don't know what makes you pull the trigger. Now, very often in situations like that, you pull the trigger and it drops because you're not using any sort of entry. You're using limit orders to buy in at exact support. Well, if you do that, the downside is you can get whipsawed out, right? Another way of handling it is wait for price to head down to your area and then give you a moving average up. Okay. Right. So now Joe points out, yeah, if your winners are twice as big as your losers, right? Then what are you up? 25%, 30%, I think, maybe. So I love to see traders that have 40 and 50% winners, which means 50 and 60% losers. I love it when they're profitable, but it tells me they know how to take losses. They do it all the time. When the trade fails, they're out. That's all I care about. If they have a trade plan and the trade plan gives them an opportunity and then it fails, I want them to get out because the plan failed. Oh, well, you know, I had a 70%, 70 pip stop. Maybe it'll turn around. I mean, just the thinking is so silly, right? So if your plan was to buy it near the weekly central, then go ahead and buy it. Put your stop close. And if it goes up, you'll get paid. If it breaks, you'll lose a little bit. No one will actually care. The cool thing is if you get them right, I mean, honestly, right, you could be risking 30 pips, but you could be going for 200 pips. I mean, your winners could be 5 times bigger, 6 times bigger, 7 times bigger, because you're swing trading, but you're risking 30 pips on your entry. And then you right, and you keep your powder dry so that if it falls to your second entry, you take another shot there. Your horrible week should be like a 60 or 50 pip loss. You're like, man, I didn't get any swings this week. I lost like 50 pips, which should, relative to your account size, be a pittance. If you lose 50 pips and it's significant, then you're undercapitalized and or over leveraged. So one thing I'll probably teach you at the second half of the year, you know, is position trading. I might have to do like a course or something like that for portfolio management. I just don't think I'm going to have time to do any of these things. Yeah, you're probably right. But then again, I meet people that have good jobs or have had good careers that have money. They're like, throw $100,000 into this thing, right? They have the savings, and they open up a trade account, and they say to themselves, well, I've been a success in life, but I understand that this is going to be something that requires new skills and discipline and hard work. So, I will do this. I will do this. I'll be in a sort of a training period for the next 5 years. And they take it very seriously. They're very disciplined. They do the work. They don't just throw down a bunch of trades and try to become millionaires overnight, because that's what a poor person does. They don't even think successfully. So a successful person says, I need to go slow. I need to go steady. My risk is highest in my first few years when I know the least. And then they focus on doing the work. I mean, that's what they do. And then when they have the skills and the knowledge, maybe in year 3 or year 4, then they start, using their capital a little bit more aggressively, and they make money. But they're bringing skills to the table that made them success somewhere else, right? But the people that sit down, they're like, I want to make, I want to turn my $1,000 into $100,000. I mean, I don't know what to say to a person like that. But that person probably didn't go to university and get a master's degree in engineering. They didn't go to medical school to become a brain surgeon. Those people put in the time and effort, the blood, sweat, and tears for years of big investments of time and money. And somehow they're successful. How many small business owners do you know that make a lot of money? A lot. Then you say, well, right? And you're like, so what's the secret? How do you make money quickly? I mean, people don't do it. I mean, some people are lucky, I suppose, but I don't care about them. They'll lose it because they'll get unlucky. But most small business owners that have money that I know were overnight successes that took a decade to create. So why would you look at trading as any different? See, I'm an entrepreneur. I'm a small business owner. This is how I think. So what happens to the restaurant where the guy says, well, I only got $100,000, but I'm going to throw it into this restaurant. I'm going to upgrade the kitchen a little bit. I'm going to paint the walls, buy some new tables and chairs, buy a new sign, buy a bunch of business cards, and get an embroidered shirt. Yeah, it's got to be great. Print a whole bunch of flyers, do some advertising, and what happens? 3 months later, they've run out of money, and there's a for lease sign on the restaurant that has brand new paint and the upgraded kitchen, new tables and chairs, because they had to make money right away. And that's why restaurants go out of business. Like, it's an easy way to lose money. You need to be prepared to not make money for years. If you're lucky, you may earn enough to pay your employees. Yeah, but Richard, right? Yeah, an apprenticeship bricklaying. Wow. So, that's hard work too, eh? Out there laying brick in the hot sun, moving the wheelbarrow up and down ramps. Oh my gosh, huh? Yeah, Joe's right. There's a barber shop. Yeah, yeah. Well, at least the barber shop is usually that much. Yeah. So undercapitalized. Get a part-time job. Sell everything you can possibly sell. Cut all your expenses. this, that, or the other thing. Just scale back and say, like, I don't know, use me as an example. I'm guinea pig on this one, right? Scale back your expenses because you go to university as a 40-year-old for the next 5 years. Harvard, I'm very expensive. Do Harvard work for 5 years. Like, oh, snap, what? I have to pay Harvard to go to school, do work for them? Cheap. Oh, wait. Yeah. Anyways, apparently I have 2 children, still be a good husband. You know how hard that is? And I have to put up a whole bunch of money up and sacrifice 24 hours to do it for 5 years. Dude, I bet you most people won't make that sacrifice. And work it off for 5 years. Absolutely no hope of return on investment in those 5 years. Will a Harvard degree get me into a big fund? I'm good looking. Some work for me, some, you know, my homework schedule is 40 hours a week. Did you know that? 40 hours of homework a week. Years. And I got to work. And I got to trade. And, mental and help out the world the best way I can. And travel and do all these things and raise children and go to school events and go to children activities and still be a happy husband. Working harder than 13 years of hard work. I don't need anything. Let's like yes, every some people buy fast. Sorry. bought a Harvard degree. I don't know. I'm an interesting dude. I'm interested all around me, and I have that feeling all the time. Not for like where I live, but if I leave, I live long. My little walls of paradise, like no joke. If I just gotta leave my neighborhood, it's true. Oh, exactly the same. And this with one get out here. hard work, dedication, sacrifice. I hope you with you. Have a nice nice 20 minutes. We'll go to the calendar. We'll look at the